It's Friday, April 26th. I just wanted to talk to you about a few things because I said I'd make a video. Um, First thing I want to talk about is futures. I don't get paid. There's probably a way I can figure out to get paid from this, but I really don't care because I make money in the market. But if you're interested in trading futures, look up Apex Trader Funding. It's ATF.com, not gov, but ATF.com. Look up YouTube videos of this. Right now they're running a special. It's only going to be good till Monday, but anyway, it's $30 of your real money, and what they do is they give you an account, and you have to pass a test. And once you prove that you're a good trader, you pass this test and you make $2,000 in profit, then they'll give you a real account. And anything you make up to the first $25,000, you get to keep it for free and use their money to do it, right? I think it's $100 once you get past the test, once you get approved. It's like $100, and that pays for all of the information that you need to trade, like the futures, the fees associated with trading futures. Anyway, I'm not going to go into this big time, but just YouTube it, look it up, ask me questions if you're interested. Like I said, I don't know how to get paid from this, so I'm just saying it because I think it's cool. You trade with other people's money in America. If you have to be a U.S. citizen, I believe, for this, but maybe not. What I do is I use Tradovate. These things confuse me because they have a trailing stop loss that I hate. So I use this one, 100,000 static account. And they give you $100,000, and you can trade 2 contracts at a time. And they're kind of like options, but a little bit different, because the way options work has like theta and all that kind of stuff and decay. Futures have no decay. But if you go to like ES, for example, that's the S&P 500, and let's say you were going to take a trade. And seriously, like, watch videos about this because I don't know what to say about it. But so if you look at the price of the S&P 500, it's at 5131.75. So for every 0.25, that's like $12.50 in profit, in money. So it's kind of like an option where you're leveraged, you know. But you can make a lot of money really fast, and you can lose a lot of money really fast. So please do your research first. But it is interesting to me, and I've been getting into it for the last year, and not really doing options except for swings. So on my alert channel, I just want to focus mostly on swings, overnight stuff, and couple days out type stuff. So I'm going to cover that mostly today. But I did want to talk to you about, because we made quite a bit of money on NQ, which is the NASDAQ 100. Let me clear off my chart here. How do you do that? Erase. That's a magnet. Where's the eraser? Delete. Remove. Okay. So, and the futures are open 23 hours of the day, right? So you can trade in the middle of the night if you want. But what you'll learn is there are tricks and stuff that occur in futures that don't always occur during the day. For example, stuff that happens in the middle of the night is important the next morning, right? So let's see. So like this was the middle of the night. right? Not a whole lot happens. You can still make some money every once in a while. But basically, you want to say, okay, there's this range after the market closed. That was a huge rip on earnings, right? But you could say there's basically like this range or whatever. And what happens is usually they have something called a fake out, where you break below the range in pre-market, and then once the market opens, they rip it back the other direction and break through the other side of the channel, and then as you see, they came back down and retested it, and then that's when they ripped, right? And what we were playing today was actually short. We were playing short off of a prior level, which was right here. I don't know if we got to that high. Did we get that high? I don't think so. We were playing off of kind of like this range here. I don't know why my mouse isn't working very well. Oh, it wasn't that range. It was this gap right here. So I think I had it on my screen. It was red. I'll make it red. Whatever. Okay, let's drag this over. And the idea was, when they ran up into this resistance, we were looking for a short. While everybody else was trying to buy the breakout, we were looking for a short. And oh, that was a long time ago. Here we go. Right? So this is what my chart looked like. And I mean, how did you know that? How did you know that would be the top today? Right? So anyway, look to the left is the scenario of that. So what they typically will do is they will run up to a high, right? And then they will run up and they will what they call sweep the high. They'll sweep the high and then fall back in the opposite direction. And your target is normally either the bottom of this channel again or actually breaking through it and coming down here. So, and I think if you look at the daily chart, actually the target was the high of yesterday, which was 1729 or something like that. I don't know. That was my target. So I thought they would run up here, run into this resistance, drop back down below this, and then continue a bear trend. Because I have this idea that, you know, we're in a bear trend, and so we're going to look for places to short. And we kind of have an ABC, if you want to call it that, like a move, and then you can see B, and then C, and then continue the bear move, right? So I was kind of looking for a reversal today anyway. I saw that was a resistance area, and so I was looking for a short. I'm surprised they tested it so many times, but it still worked. It still worked. It just, they kept, the reason it didn't work is because they kept putting in, where's my pen? Can you tell I'm not a professional? They kept putting in higher highs each time, and I was like, why do they keep putting in higher highs? Right? It wasn't until the end of the day that they put in a lower high, so we could see continuation down here to this area and lower. But all that to say, so futures, you can play a couple ways. If you're really, really good, you can play the break of the pre-market channel and look for a fake out move and play up, right? Or you can just play prior resistance areas that nobody else knows about because it happened in the middle of the night. They're not paying attention to that, and so you'll come up, you'll sweep that area, everybody's buying a breakout, and what happens? The breakout fails, And like I always say, just like this, the failure is always twice as strong as the initial move, right? So they failed to break down, so they got a huge rip, right? They failed to break out, so they got a big drop. And then they came back to that area, and that's where we got our end of day short, which was awesome for like $1,900, right? So each tick is $5 on the NQ. So 17,886.25, 17,886.0, that'd be $5, right? So if you move from 886 to 836, and you have this 50-point move, what's 50 times 5? $2,500, right? And in options on QQQ, we moved from $432 to $431. So we moved like $1.50 here. That would have been $150 in options, or $2,500 in futures. So I've been interested in this. Anyway, that's all I'm going to say about that, because I don't want to be responsible for you guys losing all your money. Let's talk about some trades real quick. I've been screaming about IWM bullish for a long time, and I'm starting to doubt myself, but I'm going to keep looking at this chart, and I'm going to say IWM is still bullish for another move higher, because the market tends to fill gaps, and maybe I'll cover that some other day. But we had a gap right here from here to here, right, that we eventually came back down and filled, right? But that gap is important. So let's see why that would be important. Let's see. High of this candle was, actually the close, 193.33. Let's see if this is important. So we had a run from this break up all the way up to here, right? And we'll make these green so you can see what I'm saying. We came back down, chopped around, got below it, whatever. But then right here, this tells us something. There is an institutional buyer that pushes the market all the way from 193.33 all the way up to 205. Right, 193 to 205. Let's see what this guy did. 193, 203.50. He didn't quite get there. Came back down. Look where they bounced. 193. Come on, mouse. Whatever. 205. Right? Yeah, something like that. I don't know why my mouse is acting weird. But anyway, so what is the expectation now that they've found support and they've retested that area? 205. Which would also, what do you know, fill this gap. Right? Fill this gap. I think my computer's getting tired. So am I. So anyway, that's why I keep saying IWM to 205. That's my swing. Let's look at Tesla. Tesla's really interesting. So I've deleted all my notes off of this. But we've obviously been in this downtrend forever. Right? So let's look at gaps and see what's important. So this gap was pretty important. It was from there all the way to here. And then it came back down and then chopped. But this is one buyer. Right? So let's mark that off. 146.13. Right. And let's see if that was important anywhere else. Go back here. Oh, look at that. Did you guys know that was going to happen? That's that same dude. Right? He's pushed it all the way up to 199. Right? What did this guy push it up to? Come on. 199. 199. you see that? You see how this was also resistance? Now this one came up a little short. I'm curious what pre-market did. But it might have been the same guy from right here. Where's this level? 154.56 up to 199. Right? So what is the expectation? Let's go into our 4-hour chart and see if this shows us anything. So look at this candle right here. Now this was earnings, right? But what is the chance? What are the chances that this guy is also going to push it all the way up to here? I think it's pretty high. So I'm betting long. The reason I was playing short today was simply because it was Friday and I was expecting a move down from this seller to retest this area, which would make sense also, because then you'd have two sets of buyers. You'd have this buyer and you'd have this buyer, and that would definitely squeeze it to 199. So we take that short down to here, and then we ride it back from 155 to 199, guys. That's going to be the trade. If you want to try this with something else, let's look at Apple for a second, just see just see what it's doing. So let's start on the daily chart. Let's see, let's find some gaps here. There's not much happening right now. I mean, it looks like it's just kind of indecision here. It looks like it's support, but it's really not, because I don't know, maybe it is. So let's take this guy. He jumped from there, but see, it didn't go very far before it pulled back, so it really wasn't a great trade. You'd really want to play this guy, because this was a gap up and run. So you know there's a buyer from right here and potentially all the way up to here. So from here to here, see this candle right here? This was a gap from here right up to there. Oh, look, I missed one. Look at this guy from here to here. So see how, are you seeing what I'm talking about? See how that works? And then over here now it's resistance. It's been resistance twice. So nothing to do with Apple right now, but if we ever get back up to 175, look for a quick run all the way up here. So when you're looking at your charts to swing, and look how many days this was. 1, 2, 3, 4, 5, 6, 7, 8 days. 1, 2, 3, 4, 5 days. Now the initial move always takes a long time, but that's him getting in, right? And then these are him defending, or her defending her position, right? You can do the same thing short. So let's take short here. From there he pushed it down to here. Let's make this one red. If you're still following along, this is kind of a lesson. You can argue that he really got it to here, but you might argue also that his move ended right here. But I mean, look at that. Started right here and was a seller, so let's make it red, and he ended right here. Same thing, started here, ended here, right? So that's how swings work, in my opinion. But a lot of times I'll say, you know, I'm early. I'm not wrong, I'm just early. So, you know, Tesla might be early because it needs to push down to this 154 area before it runs to 199. So that's why I'm a little bit bearish just for a few days. But for real, you start getting crazy here, you could say, you know, really look at this move. I mean, if you want to be crazy, I don't know if this is true, but it is possible that this guy actually bought from here to 300. Right? Let's make this one purple, because that means maybe. And then what did he do here? He bought from here to 300. Like, you can't make this up, right? So what if they got down here, and instead of just going to 199, they gap over this area? They've got more earnings coming up here, and you get a move like that. And you say, that's crazy, Mark. Well, it's happened twice before. Let's look over at Bitcoin. Everybody was saying Bitcoin's going to be topping whatever. Bitcoin was done. Oh, I didn't have my chart saved. But watch this. From here. Come on, mouse. Really, it's just to there. From here. That's your range, right? So what happened down here on this breakout? Look at that. Who expected just this little breakout would cause this monster move all the way up to here? Right? So, oh, come on. Silly thing. I mean, you can't make that up. You're watching me mess up this stupid mouse. See what I'm talking about? Okay, that's how swings work. Now these swings took a long time to work out, but the third time was a charm. It worked out pretty dang good. Right, now look. Now look. This is what? Support. You see that? So let's assume this is like either we lose the support and we're coming all the way back down here, just like this time did, right? Or we will have an equal opposite reaction higher. So let's get the Fibonacci out. Here to here, and then take it and say, okay, equal opposite reaction from now support. Where's this puppy going? $107,000, right? Call me crazy. That's how swings work. So I'll work on some more swing ideas. Right now, let's wait on Tesla and see if it comes back down to 154. If it just starts to rip and take off, then, you know, we can get it far enough out that we can ride that one too. IWM still going to 205, which means the market has a little bit higher to go also. So if you want to look at NASDAQ, you'd say, okay, where does this want to go? Well, we had prior resistance right here. See this flat line? Prior resistance, right? So that's going to become support over here. And if we had our magic, oops, not that one, magic Fibonacci tool to measure things, because I don't know how to use tools on TradingView, we'll say about there-ish. An equal opposite move from this low would be 19,500. That's more likely the top of the market, right? So we're still bullish in the long term. In the short term, we could see another push down, and you can see how Fibonacci works too. They bounced off that 50% retracement, right? It's just crazy. It's just crazy how this stuff works. Anyway, I'm tired. Let me know what questions you guys have. Check out ATF.com, and please watch all their videos under FAQ before you decide to do anything, because you can lose a lot of money really fast. Thanks.